7 floor.
We'll see you around the timeline. Feels good to be back.
I think the Rollup is one of the most premier media brands in crypto, and Andy and Robbie are great experts at everything they talk about, and it's my favorite podcast.
Adding it to my library as we speak.
Potentially multi-chain deployments.
We are at DevConnect Day 1 here. I'm with Jesse from Base. JP Morgan, BlackRock, DTCC, Fidelity, the entire thing was just institutions. It's next level. This industry is going to the next level. And guys, I don't know what else to say. I'm bullish.
He said it, he finally said it.
I'm so bullish.
Andy's bullish, I'm bullish, we're bullish. Is headed to the top. If we're not already at the top, we're going to the top.
Rollup is my favorite.
From all walks of life, all over the world, all over this industry, come together for the Rollup.
Zoom out. The institutions aren't coming. They're simply here. It's the golden age of crypto, guys. Get right. Let's go.
Welcome to the nest. See you on the show.
Good morning, Rollup Army, investors of the future. The future's generation bloodline is responsible. You are responsible for your kids' kids. Today, we're gonna make sure that your kids' are gonna be great. It's Monday, it's June 29th. We're in the tokenization tower, live from the financial capital of the world. You're watching the Rollup here on a nice bounce of a Monday. What a weekend. for those paying attention to this market. I mean, Ansem trying to revive the trenches, Hyperliquid HIP4 interest ripping. Tokens were down, now they're up. Saylor comes out this morning and is like, look, guys, we're not going to sell Bitcoin, but we can sell up to $1.25 billion of it if we need to. Judging by his performance on the buy side, I don't know how his performance on the sell side is going to be, guys.
Embarrassing.
But I'm not worried about it. Hype's at 65. Per looks great. It's 7:40 p.m. Good to see you, Rumps. Thanks for being part of the group here. Hello, Niang. Good to have you as well. Innovative investors of the future. Welcome back to the Rollup. It's good to have you guys back. We got another great show. Robbie's still in Peru. Haven't really heard from him much, so assuming the ayahuasca gods got him good. They might have. There's a chance that Rob drank something that looks similar to this, but it's not called yerba madre. It's called something like San Pedro or ayahuasca. And there's a chance he's gone forever. But there's also a chance he comes back. He comes back with more mental fortitude than one could even imagine. He's probably riding some alpacas out there. All right, let's get into the show for today, guys. As always, we are live in the tokenization tower. We got the markets, the weather live from New York. We had a hell of a weekend here in New York. Had friends visiting, fun time, tons of World Cup games. People were really fired up in the city. You got Colombians, you've got Congo people, you've got French and Norwegian and Ecuadorian and German just running around. So the whole city feels like it's a sports bar. I think I saw a tweet. It was like New York City in June is like a massive sports bar. It's like totally the vibe. I mean, we were literally outside for the Knicks game for like 3 weeks straight. They won like 13 consecutive games. It was unreal. And then, 3 days after the World Cup starts. So it's been a sports bar here in New York. Markets and weather live from New York. Stabled up episode with MoneyGram CEO, which is a kind of a big thing for the Rollup. He's coming about, and MoneyGram is really pushing into stablecoins and doing a lot of work there. Infinifi's founder is going to call in after that, and we're going to do markets, charts, news, MicroStrategy, what's happening in the markets, what we're looking at, Hyperliquid and Lighter leading again, as I said that, and Stretch, and what's happening here. So that's the show for today, guys. As always, powered by our friends at Trezor. Visit Trezor.io. Use code ROLLUP10 at Trezor.io to get your treasure today. Let's get into the show, guys. Before we do, let me tell you about Frax, our premier stablecoin partner, building the future of digital money. Open, stable, borderless. Visit Frax.com to learn more about what they're doing there. Guys, it's 83 degrees. We had a heat wave in New York. It's going to be 100 degrees Wednesday and Thursday. It's not what the boys need. The show is going to... So, the studio is, pretty chill, right? It's 75 right now. But when it gets to be 100 degrees out and that sun is coming in from here directly onto the studio, it gets hot in here, guys. So Wednesday, Thursday show is going to get changed up a bit. No show Friday. I'm going to take a trip for July 4th weekend. Happy Independence Day, 250 days here in the States. I know all the Europeans watching are blaming us for exporting our air conditioning, what comes outside of the air conditioning, almost like the carbon dioxide, into your country, causing a heat wave. But I promise you, it's 83 degrees. It's going to be 95 in New York this week. It's not our fault. It's not our fault, because it's hot here too. As always, our markets, our weather is powered by our friend at Relay. Use relay.link to start swapping assets today. Hype's breaking back above 65 as we speak. Yes, I have the 5-minute chart up on my laptop. No, I am not a degenerate. Getting into the markets. Before we do, let me tell you about Denari, building infrastructure for tokenized U.S. equities, bringing real-world stocks on-chain. Do more with your stocks. Trade SpaceX now on Hyperliquid Spot. SPXD is the ticker. Get in there now. Guys, I've been saying that Bitcoin needs to hold the line. It's going to sweep these lows under 60. Who knows how long it's going to spend under there. And then I think we're going to get a nice summer kind of low back up, July and August. Maybe we'll see. We'll see how long it lasts. But I don't think we're going to the gulag right now. I think we're fine. I think people still think 60K is value, especially under 60K. I think the way the market is kind of messes with your head is you get this chance to buy under 60. You think it's value. You get rewarded for that. Then it goes up to 80 like it did last time, comes back down to 60. You think it's value, you get rewarded for that. My take is that it maybe goes up to like 70s, low 70s. And then it comes back again. You get value. This time it doesn't necessarily immediately go back up, comes back down, then you get really deep value. That's kind of what people think is gonna happen. It has become overly consensus that, we're gonna have a little rally here and then we're gonna, bottom out in October. So it's kind of a little bit concerning if you think it's like overly consensus, right? That like, all right, we're gonna have a nice summer kind of like bounce and then we're gonna bottom out in Q4. But the thing is, guys like Ben Cohen and other kind of like 4-year cycle people, if you will, they've been saying this for the last 8 months and nobody believed them. So it's just like now they believe that it's happening because it's gotten a lot deeper into the market. So ETH, I mean, I don't know, man. Solana looks better than ETH for sure on any sort of technical analysis perspective. Chainlink, Near also look okay. Near better. Chainlink's kind of struggling, but it should. I mean, I think Chainlink is going to be seen as like the easiest deep value play when you think about tokenization, stablecoins, the rise of perps, the rise of TradFi and DeFi kind of converging. Yes, people will say there's no value accrual. Yes, they need to figure that out. Yes, it's going to keep happening, but I think like Chainlink at $5 to $7. You're gonna look back in the future and like, whatever, half of a decade, 3 years, 2 years, and like it'll have materially increased and I think it'll be obvious. So we'll get more into the markets, more into the actual assets that we're holding deep size in and trying to get into what's happening here. Before we do, let me tell you about Zama powering our digital assets market. As always, Zama.org to learn more about their confidential portfolio tooling. All right, we're gonna get into the news, guys. Let me quickly tell you about Near, your home for building, discovering, and using apps on chain. Visit near.com, one account, no borders, your entire financial life on chain. Looks good there. All right, guys, let's not bury the lead here. Michael Saylor announces a digital credit capital framework designed to strengthen digital credit, enhance liquidity, and preserve long-term Bitcoin exposure and support long-term value creation. So what actually happened here, guys? Well, what actually happened, I think, is that Saylor was under a lot of pressure. I mean, you got perma bulls on Twitter like Kaleo. I don't know if you guys follow Crypto Kaleo. He's a good friend of the show, a friend of mine, and he's always bullish. He's always posting these fractals that are like giga bullish. And, he's coming out and basically saying that Saylor's done and that he's gonna get in trouble and Saylor's screwed. But what does Saylor do? He announces this digital credit capital framework. He increased the US dollar reserve by 1.2 billion, increasing the total reserve to 2.55 billion, which covers about 18 months of the stretch dividend obligations, which from my perspective is plenty of time. Like I said, I don't think we have much more than a quarter, maybe 4 months left of this bear market. So 18 months of dividend payments, I don't think Saylor has to sell much Bitcoin. I don't think he needs to. They also raised the dividend rate of stretch to 12% to strengthen demand and support near to get it back trading to par. Let's see, what is it at now? STRC. It's at 82. So it bottomed at 71. Guys, I mean, this is what I was saying. Guys, the bull thesis right now is that the biggest linchpin right now is stretch getting back to like low 90s and that releasing a lot of fear and getting this market to move back to the upside. That's why I think it's still skewed in the bulls' favor, because I legit don't think this thing has to fully repay. Like, I actually just think that it has to get back within 10% of repeg and all of the FUD and fear will go away. And so I think that's just like an easy thing to have happen. And if that's the biggest risk in the market that we're seeing, then yeah. Bro, did you get into Velvet like I said last week? I did not. That thing ripped though. They were DMing me on Twitter and I didn't. I didn't get into Nest either, guys. I don't know how that has moved. We'll have to look at it. Nice summer cut. Oh yeah, I forgot. You got a haircut, guys. I had a broccoli curly head before. It was getting to be the point where like I walk outside to go out to the bars or to go get some food or see some friends, and I have to wear a hat because like I'm like, dude, I got an afro. Like, I can't be rocking this afro. And so it's, you know, once it's at the point where I have to wear the hat outside, then I'm like, all right, it's time for a cut. Ponzi continues, LFG stretch. Yes, Edward, yes. The Ponzi does continue. I think we're looking okay. Stretch at 82 as we speak. Hype sitting at 65. You love to see that. Lighter, I bought more lit over the weekend. Yeah, Freedom Guy. I think you're right, man. Like it is just early. Like back the truck up on these things. Manage your own emotions. Get good entries. The lighter close on the weekly was the highest that we've ever seen. So technicals wise, it looks good. I bought some more Plume and Near too. Attaboy. So look, the just to close out here on Saylor, the company authorized a separate $1 billion repurchase programs for its digital credit securities, which is Stretch and MicroStrategy shares. And as part of this Bitcoin monetization plan, they can sell Bitcoin to fund reserves, dividends, and buybacks, bringing the total coverage to about $3.8 billion or approximately 26 months. Again, about 18 months if they don't sell any Bitcoin, which I don't think they need to. So as we were saying last week, guys, I think we're good here. I think we're like out of the woods a little bit on Stretch and Saylor and all of this. Like I think we're fine. Bitcoin's at 59.7. I also think that we're getting ready for a bounce on Bitcoin. I think we're getting ready for that summer low. It may not be anything crazy explosive, but I don't think we're gonna just go to hell right here. I think we're gonna get a nice summer low. I was watching one of Benjamin Cohen's videos, and every midterm year, Bitcoin has this like summer lull where it kind of like rises slowly. And that's where we're at right now. So whether it's data, whether it's maximum FUD at the bottom, whatever it is, that's my take, and I'm gonna stand by it. Let's keep it rolling. And I think this next tweet is actually like pretty, is like a pretty good example of how I feel. With each passing day, I get more and more bullish. We're getting closer to quote unquote the inflection point where everything will, broadly speaking, flip from a bearish to a bullish trend. Every day we get closer to the bear market ending, it will end. Don't listen to people who are completely bear hold. If you've made it this far, well done. The hardest part is over with. Eyes on the mission. Get ready for what comes next. And that's what I've been saying to you guys. Like, I think we are reaching that inflection point. I don't know if this is the bottom. People are calling for bottom here. I think it's a little bit aggressive, but that's how it always feels at the bottoms. But I think at the worst case, we have 3 to 4 months left. And I've been saying that. Basically a quarter left. So, you know, even if that's the case, then yeah, it's already been 9 months of this bear. Like October 10th basically was the beginning of the bear market. So it's been October, November, January, all the way through now to July. So it's been 9 months, 8-9 months, right? And so, you know, I think he's right, and I think we're positioned in the right assets, guys. LFG, I'm all out of dry powder now. Yep, I'm with you. LFG, counter trend rally for Bitcoin MIO before 200-week SMA retest in October. Yeah, we just got a weekly close on Bitcoin under the 200-week moving average, which is like super not great. But I think that's even more of a sign for me that the likelihood of getting some lower lows later this year is probably increased, but the likelihood of getting a bounce here is also increased. But I don't know. Ben Cohen says he doesn't trade the counter trend rallies. He says he doesn't do it. He's like, I don't trade them. I don't like to trade them in bear market. I just like to accumulate. He also says that like a second half of the year, so as of like tomorrow or Thursday, he says DCAing in Bitcoin in the second half of midterm years has been a very, very sound strategy. So just turning up the DCA, every paycheck that you guys get the next 6 months, every trade that you make, every winning sports bet, whatever it is, a little bit of DCA into Bitcoin, I think could work. I think a little bit of DCA into Bitcoin, every single paycheck, every single winnings, anything, any big trade, put a little bit away, keep putting it away, keep putting it away, keep putting it away. And I think you'll be happy that you have like a long-term, never sell, don't need to trade this stack of Bitcoin that you accumulated in what has been known to be the best time to accumulate Bitcoin. So, not financial advice, as always. Nice cut, Andy. What up? New type. Thanks, bro. Base outage makes me doubt we're ready for prime time. Yeah, I don't really know. I don't really think base's outage is all that relevant or important, to be honest. But I think we're still in the earliest era of blockchains, right? And it does make you like grateful that we have Ethereum, right? If we didn't have Ethereum and Bitcoin, I would question it all. But those two have just never gone down. And you're just like, all right, we know where the actual tech is, if you know what I mean. All right, guys, let's keep it rolling into the next news piece. Before we do, let me tell you about Infinifi, building DeFi infrastructure for simpler access to on-chain yield, liquidity, capital allocation. To explore more efficient on-chain finance, visit infinifi.xyz. BlackRock CEO, our biggest bull, not our black bull. Our black bull is Ansem. Our lovely black bull is Ansem. This is our white bull, Larry Fink, argues that digitizing stocks, bonds, and real estate could reduce intermediaries, settlement times, and transaction costs. He is calling for a common blockchain framework to secure tokenized assets across markets. It really does sound like Ethereum. When you read this, when you listen to the clip, it sounds like Ethereum. Let's hear what Larry has to say. This is back from January. So this is like when the tokenization craze was really catching up. Let's play this thing on 1.25x or 1.5x speed, please. Try to speed it up a little bit.
Tokenization, some people here will know it well, some people will not, so maybe you can help level set. But I think you have a view that tokenization is effectively going to change finance forever.
Yeah.
Yeah.
Would it explain?
Explain.
Okay. There's so much conversation going on about AI and how AI is going to be reshaping the world. There's not enough conversation about how technology is going to be reshaping the financial services area too, and the need for democratization. As Secretary Besson talked about the democratization of investing in America. There are slews of middlemen in the whole financial services area. We have elongated settlements, elongated processes. If we could digitize every asset, so if we could digitize all stocks and bonds and have it more seamless going from a digital wallet of cash or stable coin into equities or bonds through, in most categories, through an ETF, it will reduce the friction costs, the transaction costs, and it allows a much more free flow. So there's $4.1 trillion of money in digital wallets globally, sitting in stable coins mostly. And can you now, and right now if they wanted to go into a bond or stock or have a real estate transaction, they have to take the money out of the digital wallet into a traditional wallet and have all those commissions and fees and all that stuff. So the whole idea of tokenization of all assets, including real estate ultimately, is to just reduce huge friction costs, making investing easier, simpler. You could, as the Secretary was talking about this one account, you could do this all through your app, and it's going to allow a more, I would say, a free-flowing process of investing.
Yep. I mean, Larry's right. I mean, how could he not be right? The guy's giga rich. I mean, he is advocating for what is going to happen, and he knows. Like, he's smart enough to know when there is a open source, programmable, 24/7, seamless technology that you just don't get in front of it, and you go and you just long it. Like, you long it with your public credibility, you long it with your public perception, you long it with your capital, you long it with your investment theses. Like, when there's something that is just going to win and you're this experienced, you just know that you have to get behind it. You can't not get behind it because your reputation's on the line, your firm's performance is on the line. And so this is such a big win for digital assets industry at large because we've gotten to a big enough size where the largest allocators in the world have no choice but to create a strategy to, you know, circumnavigate this ecosystem. And so we're winning, guys. I don't know what else to say. We're so early, it's nuts. We're gonna be crazy rich. Freedom guy. Dude, Freedom guy's hilarious, man. This guy's got a Darth Vader as his profile picture. Any thoughts on ETH becoming like an internet utility company like AT&T and Verizon? Obviously, internet providers didn't accrue tech value from tech and SaaS. Yeah. Yes, I get what you're saying, but I do, like, if I had to put my ETH bull cap on here, I would say that the blockchain designs change the value accrual because of the network effects that are created from all of having the most amount of stable coins on chain, the most amount of tokenized assets on your chain, the most amount of developers, you know, transaction activity, using ETH for gas or, you know, whatever. So what I think is like maybe more like comparable is more of like a commodity-esque investment. But honestly, that's the crazy thing about this is that we've never really seen an asset like Ethereum. And I know it's right now, it's like the butt of all the jokes, but we've never seen an asset like Bitcoin, like Ethereum, really like Ethereum though, that has so many of these properties and that is so different from like the internet companies or the HTTPS companies, but is yet so similar. It's just really interesting. I think you can't go wrong owning some, but I own a lot more Hyperliquid than I do Ethereum. Quality assets only, DCA. I mean, that's all we do on the show. Guys, Bitcoin's back above 60. Man. Guys, I got you. I'm telling you, I don't know what to do short term. I'm not putting any leverage on, but we're not going to the gulag right now. We're not. We're going to get a move that is going to allow us to have hype and lighter and all of our good favorite coins do well. Like honestly, I think there's a chance that hype could go to new all-time highs very fast. Very fast. Sorry, that Zin was just absolutely rocking me. My apologies. Whew. Man, if Bitcoin doesn't make a move anytime soon, it's going to take out most, if not all, retail traders, and we're going to crater. OG Killa, first of all, I appreciate your comment on the video with the AI guest. I thought that was a really fun video to think about investing in a post-AI world. Second of all, we're not cratering. I promise. Greg says no leverage. I agree, Greg. We're doing no leverage. We're not, no leverage. Zero leverage on this show. Forget ETH. Let's go hype. Look, I wasn't going to say it. I still own my Pudgy Penguin. I still own some ETH. Don't kill me. I'll buy ETH when it dips below 1K. Okay. All right. You might get left behind, but there's a chance you get that. 60K LFG. Bears are so fucked. Full port Bitcoin 20X. I will fly to New York and buy you a steak dinner if hype hits a new all-time high. OG Killer. The boys are getting a steak dinner together. W's in the chat. ETH will flip SanDisk soon. 2K. I agree, man. I think ETH could do well. There goes hype. Back up. We're gonna give the Bears a fucking. We're gonna rip open part of their body that we're not going to talk about on the show. Bitcoin breaking above 60, guys. I'm telling you, we're not cratering. We're gonna get the summer bounce. Anson tweeted he thinks we're gonna get a 10K candle on Bitcoin in a day. People were absolutely dogging him for it. I don't think we get a 10K candle, but I wouldn't be surprised to see some real strength come out of Bitcoin here, guys. Stakes. All right, let's get into Anson, because I don't know if you guys saw this, but this shit was insane, man. So Somebody launched a meme called the Black Bull for Ansem, because Ansem was just dogging on Pump Fund, saying, guys, we need to, do the airdrop, revive the trenches, stimmy. And Pump will just not do this airdrop. Their chart is decimated. The investor unlocks on Pump are like 2 weeks away. So guys, as much as you see, there's people saying that Pump is a good buy here, at the very least, I'm saying that the investors and the team might try to do one of those manipulated moves pre-unlock, but I am not buying Pump here. I'm not. And maybe I'm wrong. We can look at the chart and we can talk about it, but I am not buying Pump here. I don't know if it's the buy. It is up 4%. It did just capitulate to like all-time new lows. Maybe it is a buy. For me to buy it, I'll show you guys the chart and walk through it with you guys, but there's a pretty big level that it needs to break, and I wouldn't hold it overhyped. But anyway, Ansem gets us the number one runner since like 2025, mid-year probably, end of the year. We haven't had a $100 million meme coin runner on Solana since like, I don't even know, the coming of Christ himself. Ansem does it on his own on the weekend. Like, I get home from the bar at like 1:30 on Friday, and I'm like a little bit buzzed. I'm just on my couch laying down. I think I put like Percy Jackson on or something, watching a movie. And I'm just scrolling Twitter, and I just see Ansem just reply guying to everyone. Like, I know he's just sitting at his crib on his laptop watching his portfolio of this meme coin that he owns go to like $50 million. I was like, bro, what? I like responded to one of his tweets. I was like, dude, I just got home from the bar and you're up 300% in the last like 6 hours. What happened? And so I think Ansem just tweeted that he gave out $7 million of this airdrop already. And yeah, so I didn't buy this, but what's happening is the people that are buying this are getting airdrops of Ansem token and other tokens. And basically, they're trying to create like a whole thing here where this is like the Pump Fund airdrop, and they're trying to flip Pump Fund. I'm all for it. I'm stoked. I think this is hilarious. I think it's amazing. I don't know how high it can run. It did hit 100 million already. And I saw MEXC listed it. Let's see if I can find this thing. The Black Bull. Yeah, I mean, it's kind of crazy. So Solana's, seemingly on the revival. And then also Ansem saying that basically he thinks that Sol is going to really rip from here. And honestly, guys, if Sol flips 79, it's going to have a big run to 120. I just think a lot of these charts are lining up for Bitcoin to go to 70K, for alts to have a party, people to think the bottom's in, and then we kind of run it back turbo one more time before the bottom's actually in. Like, it's lining up that way. But I mean, guys, like Bitcoin's breaking above 60 right now, and the response from hype is incredible. The response from hype is incredible. I'm only buying AI, perps, infra, and RWA tokens from here out. I got bags of everything else. Sol is dead, man. Look, I don't know if it's dead. I don't agree it's dead, but I don't want to own it over hype. I'll put it that way. Chart-wise, like obviously like narrative-wise, chart-wise, there's whole different, but like just chart-wise, I mean, hype's obviously in a multi-month long bull trend that is more likely to continue. You know what they say, the trend is your friend until the end. And Sol has a lot of work to do chart-wise to make it back up. If Bitcoin runs, most alts will not move in. Like, I don't know what you're trying to say. Alt season question mark. I mean, I think Bitcoin dominance could take a dump. It kind of already did. And it actually looks like it could go lower. So yeah, I mean, I think we could get a nice move. I just think Bitcoin going up here is going to catch a lot of people off sides. Like, people are short, people are bearish, and I don't see it as much. So that's Ansem's coin, that's Solana, that's the charts, that's where we're at, that's what I think. And you guys know how I'm positioned. I think a lot of us are positioned similarly. Hype, Lighter, Aerodrome, Near, some Zcash, Bitcoin, long-term, tiny bit of ETH. And then like looking at coins like Jito and Nest and some of these other ones to win. Even Link, it is used. Link will be all right. I think Link's going to survive and do all right. Only coins that are strict real-world use case utility will survive. All the BS has been weeded out. I agree. And that's why I think it's as easy as it is right now, guys. Like, it's never been this easy to be an investor. Like, it's been very hard to be a builder. It's been very hard to be an investor when it was like meme coins and Bitcoin underperforming, but it's been very easy to be a builder, launch a token at $1 billion, $2 billion OTC and make 20 million. But that's changing, where it's harder to launch tokens that do well, and it's much easier to invest in just the sole couple of tokens that are doing well. Pump my STRC bags so I can dump. All right. All right, guys, let's keep it rolling into the next piece. Before we do, let me tell you about LeFi, our building infrastructure for cross-chain swaps, bridging, routing across the on-chain economy. Visit lee.fi to learn more. Stable Dash guys have a video here about ramp and about corporate spend and stable coins as well. Let's have a quick listen here. Are you going to go to watch party for Wednesday, bro? Who is playing on Wednesday? Is it the US? Probably is the US, right? Let's go ahead and play this.
I almost worked at Ramp twice. I remember interviewing with Eric Glyman at the end, and I think it was the first time. And Eric
Bitcoin's
said something.
flying.
I was asking, I was like, I'm a huge credit card points guy, this and that. And he's like, no, you don't get it. Like, we're trying to make it to where you don't spend money. Like, not give you the 3%. Like, just don't spend you don't need to spend the dollar. And I don't think people realize how much more of that there is out there to be done. Like, they all waste money. Like, why? That's inexcusable at this point. So anyways, I think there's a bunch of people out there that are going to work on this sort of stuff. But
what do you think he meant by that?
It's easier it's better for your business to save the dollar than to give you the 3% on the rewards. I almost worked at Ramp twice. I remember interviewing with Eric Glyman at the end, and I think it was the first time.
It's a funny point because it's like, people do like get really excited about like credit card miles and flight miles and all this. And like, you're just better off not spending the damn money. Like, oh, I'm going to get 4% cash back on my card. Dude, just stay home. Just stay home. Don't worry, man. She's going to be there tomorrow. She'll be there for you the next day. Just stay home, man. Don't spend the money. Now, I think this is more about actual like businesses and, thinking about spend prevention. So I don't have much else here. Let's get into the next thing, because this ties into what our boy Larry was saying earlier. Athena is excited to announce their collaboration with BlackRock. Guys, I'm curious what you think about Athena, because I have different views. I have several views. USA is playing at 8. Yes, I will definitely be somewhere. There's going to be bars in New York are going to be absolutely electric for that game. So yeah, we're definitely going to be going. Athena is partnering with BlackRock to bring a synthetic dollar infrastructure to Aladdin, which is BlackRock's platform. They'll integrate USDE into BlackRock. Buildle is the primary asset for the white label product, and there'll be a liquidity facility on BlackRock tokenized products. The integration of USDE on Aladdin provides unique institutional access for the over $20 trillion of assets managed by financial institutions on Aladdin. I mean, guys, like, Athena's either going to go on the greatest comeback arc, or they're just going to struggle to get their stablecoin supply to previous highs. I don't know which one it is, but this is massive. This is like really important. A whole new set of problem right now with stablecoins and with crypto assets that you want to invest in, right? The problem is distribution. Like Sky and Athena. These things are great, right? But unless we can get actual capital allocators at scale to be able to legally and regulatorily clear path to invest into these assets and put their balance sheet into these yield generating versions of these assets, then we're just stuck with like the existing crypto market, the degens on chain, and whoever else. And so like this is solving that problem. This is solving the distribution problem for Athena, and I think it's massive. And if I'm thinking about the success stories in crypto so far, let's just go back to Hyperliquid. What happened? They broke out. They got a license from the S&P. They got the ability to trade any asset on chain. They got distribution meaningfully with ETFs, with a DAT. They got actual large-scale traders on chain. Lighter, talking with the CFTC, talking with the CME, NASDAQ to integrate Lighter into these systems. So like, what is the biggest problem with the crypto products right now? It's not breaking out into the mainstream. What did Athena just do with this? They just broke out into the mainstream. And so for me, it is a very, very bullish press release for them on Monday morning. And you just love to see it. Bitcoin's flying, hype's ripping. What is Athena doing? What is Athena doing? All right, Athena got some love on this press release, 5%. But yeah, guys, chart-wise for Athena, I mean, Athena's got about a 25% move that needs to be made, followed by a flipping of a long-term level from February for me to even consider it really investable. Unless you're just like, you know what, home run play, bear market's ending in the next 3 months, I'm DCAing from here, I want the best entry possible, I don't care about downside. I will not enter something in the bear that doesn't have the structure chart-wise to show me that there's actual strength in buyers showing up. And so I'm gonna wait on Athena till we get actual strength and buyers showing up. You know where there is strength in buyers? On Hyperliquid and Bitcoin right now. Hype's at 66, over 66. Bitcoin's breaking. We're gonna get a big pop here on Bitcoin and all the bears are gonna get cucked, man. I'm telling you guys, we're not going to the gulag right now. Saylor's announcement this morning, I think, was enough for the market to chill out. And as soon as we get a little bit of bullish action, people are going to forget. Like people have forgotten that Saylor is like a lot of the reason why Bitcoin's even gotten this high. And everyone turns and hates on him. Hey, does Hype have its own stablecoin? It did. It had this USDH stablecoin, but then they sunsetted it to focus directly on USDC, following that Coinbase and Circle partnership. So that they actually sunsetted USDH, and they just gave $10 million of grants to it, to people who were affected. So I thought that was the right thing to do, and it was nice to see. And this hourly candle on Hype is a beauty. All right, guys, we're gonna get into the daily equity segment. Powered by our friends at Denari, getting us an eye into what's happening in the traditional markets, get caught up there on the AI trade and more. Let's get into the daily equity. All right, JP Morgan estimates that hyperscalers can achieve 30 to 40% lower total cost of ownership using ASICs, such as Amazon's Trainium 3 versus NVIDIA's GB300 systems. If you guys can recall, for crypto mining, for Bitcoin, ASICs are the primary hardware used. They have been used in Bitcoin mining for a while. A lot of the Chinese ASIC miners were the ones that contributed a lot to Bitcoin's hash rate. So basically, Anthropic has committed to running its Claude models on AWS Trainium, utilizing those ASICs. But NVIDIA's AI accelerator revenue share is projected to decline from 85% in 2023 to an estimated 75% in 2026. This means that there is a shift in the underlying hardware that these hyperscalers are using. Meanwhile, there's an inference boom happening. As we all know, all of us are using AI in our daily lives more than we ever have. Daily token demand could reach 10 quadrillion by 2023, with inference taking up an increasingly dominant share of AI compute over training. This shift heavily incentivizes cost-optimized custom silicon. As of June 26, Anthropic has committed to roughly 10.8 gigawatts of compute, heavily utilizing AWS and Google Broadcom ASICs, driving billions of dollars into Amazon and Google's revenue backlogs. US might be 30 to 35% self-sufficient in advanced node production by the end of the decade. So I guess the big takeaway here is NVIDIA may remain the AI compute leader, but hyperscalers now have strong optionality when it comes to using other platforms like AWS and ASICs. So if I'm an NVIDIA holder, that's something that I'm paying attention to, something that I'm following as I'm looking at the ratio of NVIDIA and Amazon. And there are now economic incentives to shift workloads to ASICs away from NVIDIA hardware into Amazon's hardware and more. And so something interesting, NVIDIA's obviously been like the golden child of the AI boom. It's done extremely well. I think right now it's trading at 194. A lot of us who sold crypto in 2022, I bought a house, and in March of 2022, NVIDIA was at $20. I put almost 200K into this house. If I put 200K into NVIDIA in March of 2022, I'd be sitting on $1.5 million. I'm upset. Yeah. And my best friend's dad was telling me about it nonstop, but I just was like, nah, I'm not buying stocks. I'm buying real estate. Fiat debasement, bro. Like, I'm trying to protect my dollar value. Little did I know the AI boom was about to absolutely accelerate. That's our daily equity for today, guys. Custom chips are challenge NVIDIA's dominance in the hardware arms race, presented by our friends at Denari, tokenized equities for you on chain. That's our daily equity. Let's get back into the news, into crypto and more. Bybit is seizing the provision of crypto trading services to all users residing in the European Economic Area, effective immediately. Bybit directs clients to MiCA's licensed EU entity. Same thing's happening with Binance. Guys, to all the Europers out there watching this, you guys are really struggling right now. And the regulatory hoops that are requiring to hop through here are just insane. And you know who loses with this type of stuff? It's the European consumers. That's who loses. It's the European consumers who lose. It's the European GDP of countries who loses. It's the tax dollars that aren't going to go to Europe because they can't trade crypto in the next bull run. You'll have the last laugh, bro. Don't worry. I hope so. If you put 200K into ETH instead of a house, you would now have 100K. Yeah. I guess there's some solace in these things. Like me, Edward, I know you like Lighter more than Hyperliquid because you're just like an ETH aligned. Like you see the exit hatch that Lighter has in the tech and you're like, oh, better tech, ETH L2, ETH aligned. I'm buying Lighter instead of Hyperliquid. And for a while there, you were underperforming, but what was once the beta, I saw a tweet, it was like, can it be the beta if it has better tech? And I don't know, it's a pretty good take. Lighter at 1.73 right now, guys. I don't think it spends much more time under $2. Not financial advice, but we've been talking about it for a while on the show. It's at 1.73. Don't think it spends much more time under $2. Why don't we get into, actually, let's get into, a little bit more about Saylor's announcement. So let's go ahead and scroll down here into, or let's get into Delphi here and the strategy news that I want to, just kind of make sure that we're all on the same page on about. So let's go ahead and flip. So Strategy recently announced its Bitcoin monetization program. That was today. A framework that authorizes the company to sell Bitcoin to fund the preferred dividend bill and finance preferred buybacks. And so if you scroll all the way down, there is a chart here that we can pull up and kind of look at a bit more and just try to understand a bit like what the dynamics are. Like there's quite a bit of dynamics happening here with basically the different shareholders in Strategy's regime. Can we make this a little bit bigger or no? And in these dynamics, you have the owners of Strategy, you have the owners of Bitcoin, and the owners of Stretch. And the thesis here, guys, is basically like, can Saylor play these games where he's able to keep all three shareholders happy? Like, can he keep everybody happy in the game, right? So you got like the Stretch holders who want to get the yield. You've got the Strategy shareholders who don't want to be diluted, and then you've got the Bitcoin holders who obviously just want number go up, right? And so you've got like the different scenarios here of sideways, Bitcoin appreciates, or drawdown. And I mean, the TLDR here, guys, is Saylor is fine. I think the FUD is overblown. I think it's really ironic that the FUD on Saylor and Strategy happens right at the 58K to 60K level. I think we'll look back in several weeks and we'll see that this FUD was kind of marking the bottom. And basically, there's one path that works out for Saylor, and that is number go up. It's Bitcoin appreciates, Bitcoin per share growth resumes, the dividends paid on schedule, and Stretch goes back to the par, and everything's okay. Anything but that, stretches Michael Saylor's positions. Even if we just go sideways, range bound, we don't get a repeg of Stretch, it's a problem. Obviously, if we go down, MicroStrategy collapses, Bitcoin collapses, and Stretch doesn't get back to par, that's obviously also a big problem. And so, look, there's one path for Saylor, it's number go up. Again, guys, if you listen to us, you think that we have a quarter left in this bear market, a quarter or so, maybe less. And you think that he's going to be all right. And you think that Stretch getting back to 90-ish is the bull case for us to at least get a summer bounce, and that we're going to get that back to 100 at some point. May not be till the end of the year, may be over summer, and that this FUD is overblown and it was a really good marking of the sentiment lows at the bottom. And so that's what we think. That's what we're saying. And we're going to continue to express our positions based on this understanding that Saylor, Stretch, and MicroStrategy are not going to zero. He's not getting liquidated. And we're going to continue to hold our assets that have been outperforming. Namely, Bitcoin itself, Hyperliquid, Lighter, Zcash, Near, Aerodrome, sprinkling a little bit of Zama, a little bit of Jito, a little bit of, some other kind of favorite things that you like. And we're just going to continue to believe that this summer bounce is coming. And whether or not the bottom is in, that is not really our main prerogative currently, because the high time frame charts of the assets that we own look very strong. They look very strong. And I'm talking about the liquid book, right? Like our venture book, I mean, that's a whole other story. And those are just hodl on. Those are just hodl on for dear life and continue to just kind of, hodl on. Like those are like 5-year bets. A lot of them are smashed. EtherFi, Mira Network, Plasma, Plume, like the list goes on. But those are like very long-term holds, and those will likely recover in the next bull. I don't know if those will recover like our liquid bags will this year. All right, guys, last thing before we get the MoneyGram CEO up. It's going to be a great episode. We have the CEO of MoneyGram today, which is sick. Massive financial services company. Huge. And they're launching their own stablecoin, doing a whole bunch of things. So it's going to be a good conversation. But let's get this last post up real quick for Robinhood chain. I think this is some interesting little data analysis. So Robinhood chain coming this week, question mark. Some people are already bridging and shitcoining on it. Very curious to see how this one goes. Looks like it's going to be heavily RWA focused. Was able to confirm 90 stocks and 9 ETFs will be live day one. Full leaked list of tokenized stocks. So there's a ton here coming for Robinhood chain. DeFi summer is approaching, but with perps. Yes, I agree. ETFs also here. And then you can kind of see some of these GitHub repos that our on-chain sleuth Ultra has found. So whether Robinhood chain or not is coming, guys, I do have some intel that I do believe there will be an announcement involving Robinhood this upcoming week or two. I cannot say what it is about, but I will tell you guys that the companies that we like are doing great things and they're expanding their distribution, and more to come on that. Let's get the last one up here of RE Protocol. All right, so RE Protocol launched, guys. I was just typing, that's alpha, by the way. RE Protocol opens governance to the public. They launched their token for their reinsurance. They launched June 18th with about $600 million of TVL. They touched up to $1 billion. We had their CEO on the show before and after. I was telling you guys about it. It looked really good. It was super strong, and they have done an incredible job of managing their launch. And I think that they're going to do an incredible job of figuring out how to scale, what's coming with their business and bringing it more on chain, and then figuring out the tokenomics side of things. So they're going to figure out the tokenomics. They're going to figure out how to redistribute a lot of the value that they've created and are creating and are scaling on chain back to the token. And I think this is like one of the sleepers. We have been working with them for a while, so I am biased a little bit here. I think it's a great coin. I think it's a good company. It's a good CEO. And so we're going to see kind of what comes from this in the coming months. We need them to place a strong focus on their tokenomics. And that's what I'll say there. And guys, we've got the CEO of MoneyGram ready to join the show for Stabled Up today, our weekly stablecoin show. It's going to be absolutely epic. Anthony Soohoo, CEO of MoneyGram. I mean, this is pretty sick for us, right? Like, obviously we're like a crypto show, finance show, but I mean, MoneyGram is huge. Like, let's just do some quick MoneyGram financial stats. So they made $1.25 billion in 2025. They're projected to make more than that in 2026. Are they public? They got to be public.
Wow.
And they're launching a stablecoin. It's no longer a public trade company. It went private June 1st, 2023. They were acquired by private equity firm Madison Dearborn Partners for an all-cash transaction valued at approximately $1.8 billion. Wow. Alrighty. Well, guys, we're going to take a super quick break. We're going to get Anthony set up, and we'll be back with Anthony Soohoo, the CEO of MoneyGram, here on the Rollup. Be right back, guys. Welcome back to another episode of Stabled Up, our premier weekly show covering the ins and outs of digital dollars, stablecoins, and the future of decentralized finance.
The show is made possible by Frax, and Frax is powering the financial engine of the internet, powering FRX USD and Genius compliant stablecoins. This is the stablecoin super cycle made possible by Frax. Now enjoy Stabled Up, our weekly stablecoin show.
Alrighty, guys, welcome back to Stabled Up, episode number 39, our premier weekly stablecoin show powered by our friends at Frax. Visit frax.com to learn more about what they're doing with FRX, USD, and more. Today, we have Anthony Soohoo, chairman and CEO of MoneyGram, appointed in October 2024. He's leading the company's digital transformation and stablecoin initiatives, drawing on 25 years of technology experience, Walmart, other Fortune 100 companies. Anthony, great to have you, man.
Yeah, great to be here. Thanks for having me.
Most definitely, man. I mean, what a time to be bullish on tokenization and stablecoins in this market. I mean, while we have so much riffraff around Michael Saylor and around what the price of Bitcoin is going to be or whether Stretch is going to blow up, we have this mega super trend happening of tokenization and stablecoin growth. And so, Anthony, I know it's your first time on the show. CEO of MoneyGram, would love to just get an understanding a bit about your background, what your kind of like main prerogatives are at MoneyGram, and then let's kind of discuss this mega trend, and we'll get into all the nuances.
Yeah, sure. I mean, a little background on myself. I spent my whole career actually in technology. Maybe to even go back, I grew up in my byproduct of Silicon Valley. I grew up in San Francisco, learned to program when I was 12. And then I spent the first part of my career in tech, working at companies that you might have heard of, like Apple, Yahoo, early days of leading search engine called Infinifi. And then the second part of my career, I've actually used that knowledge because of a startup that I started, got acquired by CBS, and I helped them transform into streaming. And then it led me to lead the digital transformation at CBS as well as Walmart. And the reason I ended up at MoneyGram is because when I looked at all the transitions that happened, say from the internet boom to the movement to mobile and cloud and everything that had happened on e-com, I saw the same opportunities here in terms of money movement globally, similar to maybe the way you and I would think about these platform shifts, which was a way to operate the network a lot more efficiently, to bring down the cost, but also just drive mass adoption. I think that the point you bring up about so much noise in the current market's really true. But if you think about long term where this stuff is going, I think you and I can probably agree that there's probably nothing more clear that like currency is going to go more digital. I think tokenization is going to be happening everywhere. And the question is, how do you take advantage of that? And that's kind of why I joined MoneyGram.
Yeah, man. I mean, a lot of these shifts have happened simultaneously, right? With regards to the shift towards e-commerce, the shift from analog to digital when it comes to stock trading, the shift, now with AI and kind of like what that's happening or, what that's causing it. And looking at the, kind of blockchain shift, I suppose, what was the kind of light bulb moment for you when you kind of came to MoneyGram, your previous experience? You're looking at a business here that, has done billions of dollars of revenue annualized consistently. You're looking at this kind of trend of blockchain and this growth of 24/7 global markets, whether it be for settlement, for cross-border, for remittances, et cetera. What was kind of the clear light bulb? I have to join MoneyGram. I think this is the way that I can really make an impact in the company. What was that for you personally?
Well, I spent a number of months looking at the opportunity. I think one of the things that's really appealing about financial services, especially payments as it goes online, is the margins get better. What I would say that most people lose sight of is whenever you go, most digital transformations, when you go digital from analog, you actually lose margin. Best example is when you think about client server based software that goes to SaaS, they actually lose money or lose margins. When you think about e-commerce, the easiest example to use is when you have to ship a box to someone instead of them walking to your store to fulfill, you lose margin. But when you think about tokenization and you think about digitizing payments, your margins actually go up because the business gets a lot more efficient because you're running on much more efficient rails. And there's also, with what you brought up about AI, you have the benefit of leveraging AI for a lot of orchestrations over time that also just kind of improves. So I think that the exciting thing is when you think about most transformation, they're typically off of like one platform shift. We brought up PCs, we brought up the internet, brought up cloud, mobile. We're talking about 2 or 3 right now, all happening convergingly at the same time. You're talking about digital currency with blockchain. You're talking about the movement with AI, and you're also talking about agentic commerce. And I think that all 3 are going to really change the landscape about how consumers conduct business and commerce online. And then the second part is how businesses operate on their back office.
Yeah, interesting. So when you move payments businesses from kind of the traditional system, ACH, wire transfers. I mean, we've heard this a trillion times, right? Stable coins are far better. You actually, you gain margin. Like I think Western Union is gaining a huge amount of revenue from, having their own stable coin, using it as well, similar to MoneyGram. But in other transitions, you're saying that you basically don't make more money, you actually lose. And so this transformation is specifically special in that regard. Then I was going to get into some of the pointed questions here. Why launch your own stablecoin? Why not just use, Circle's USDC, Tether's USDT? Doesn't having your own stablecoin and using somebody else's or a variation of it, does it not achieve the same purpose in terms of cheaper costs, 24/7, global? What does having your own stablecoin enable you to do?
That's a great question. So let's just take a step back. So we actually have been working with Circle for a long time, and will work with Circle because we use their coin USDC for a lot of our products, including how we settle with Treasury, and we use other types of coins according that way. Our announcement at MGUSD, maybe the thing that's different about this versus what everyone else has done, is that we actually launched it for our own network, for our own benefit. We didn't launch it specifically for institutions or trading. So MGUSD is being used specifically for our consumers. And you might ask, why do you want to operate and why do you want to own that? Well, and there's some stuff I can get into, but some stuff I'd rather hold off on for the time being, which is if you think about kind of how vertical integration works, there's a reason why over time, I think Apple wanted to own their own microprocessors inside their phone. It's better for how they operate and integrate power management. They can build specific applications that leverages the best benefits of the chip. We actually launched our own coin for our own network, that there was a lot of benefits to that in terms of using it as a foundation to build out applications that we're going to be launching for our consumers in the future. So that was a main driver about it. At the end of the day, I think you and I can probably agree, most consumers won't care about what chain you're on. They just want to know that I want to make sure that I send money in the most efficient way. I save money, I save effort, and I save time doing it. And if I can earn some type of reward on it, that's even better. And if you can get it there quicker and you can do tracking better and you have you can lower the cost in terms of doing so because it's within your own stack, that's even better. And that's kind of the thought process we went through.
Yeah. And obviously there's the economic side of it with regards to the treasury bills and the yield as well.
Yeah. And some of that we'll look for ways to, as we save money and we have a much more efficient way we can run treasury, we'll try to pass all those savings back to the consumer.
Yeah. So I've never used MoneyGram or Western Union or any of these types. Have always just been like, I don't know, Wise or PayPal, or just using stable coins to send stuff global. Like we have global employees. We've just been paying them in stable coins or crypto for 5 years. Anytime that there's like any sort of payment, it's typically for me, it's usually with somebody who's going to accept stable coins on the other side, just kind of in a native fashion. Maybe you could just help us understand the direct unlock by walking us through a bit of like what a typical consumer journey or actions are on MoneyGram, and then what that kind of like implementation has looked like from the stablecoin side, and really like what you're seeing from the consumer preferences, user data, as far as like, you know, whether it's time spent on the app or higher satisfaction or, you know, cheaper rates. Kind of talk us through what the consumer journey is and then these implementation details and some of the outcomes.
Sure. I mean, I'll share with you a use case of how people use it today. And then maybe what I'll do is I'll talk about the ways we believe people use in the future. And, you know, one of the things in terms of new use cases, we just signed a big partnership with Kraken where we're their cash off ramp for that. And I'll explain why that partnership is exciting for both of us. So if we take a step back, the typical MoneyGram user is a person that is working overseas. It's trying to send money, large majority of them sending money back home. It's a market called the remittances space. And what they typically do, it's an ongoing transaction where every few weeks they are sending a set of funds back to their families back home to pay bills. And typically when that's happened, where it originally started was through a cash network in the physical location. And so they would walk into a MoneyGram location, let's just say here in the US, and then they wanted to send money back home to Guatemala. And that would be a cash-to-cash transaction. And we do that very well. I would say, you know, we have just a sense of close to 500,000 retail locations around the world. To give you a sense of how big that is, that's bigger than McDonald's, Subway, Chipotle, and Cava, I think, combined by a factor of like 5. So that amount of scale is massive. And that still serves a big purpose. And when you say, you know, people are going digital, why they still need a physical location? Well, the idea of sending money is there's a high level of trust here that we're talking about. And when you're sending funds, especially if you're in a foreign country, a lot of times you want to talk to someone who speaks your language, and also you can look the person in the eye before you send it. I would say that need's actually going to come up even more in the future is the ideas of deepfakes propagates. You're going to want to know that your transactions be very trusted. Now, over the last 5 years, I think MoneyGram's really pushed in terms of trying to make sure that we offer the option of a consumer who wants to transact through an app, and we launched what we call MGO or MoneyGram Online, where they can transact through either an iPhone or an Android phone through the web or our apps to send money to a peer, and they can either pick up a physical location, get their funds sent to a bank account, have it sent to a debit card, all those type of things that you might typically think of. But it is a cross-border transaction. And when we talk about cross-border, what makes it more complex than a typical transaction? Well, as you know, we work in a highly regulated industry. And when you're talking about sending money from one country to the next, you're not being regulated by one side, you're being regulated by both sides. And then you have to go through a complexity and mazes in terms of orchestration, which we all try to hide the complexity from our consumer. And all they need to know is they send from point A to point B. But between there's a high level of information that needs to be captured in terms of KYC, in terms of making sure that the transactions are cleared and safe, going through our ML checks. And then once that transaction happens, we do it within seconds. We try to send it, for most best case situations, from point A to point B in seconds, and it gets settled. When we talk about stablecoin, the thing that changes is that idea of sending from point A to point B is going to be that much faster because you're now talking about 24/7 instant payments. You're also talking a much more direct way of sending. And especially as you think about AI as an orchestration agent to allow sends to go from one place to the next, I think what you're going to find is that kind of traffic cop of that orchestration layer is going to be a lot more efficient with AI. And then let's take a step back, and I'll add one more point. So you're like, since you feel very comfortable with stablecoin, you're sending person to person in a safe way, why do you actually need these cash locations? A lot of times, though, in most economies around the world, cash is still the dominant way that commerce gets done. So you can imagine when you think about other countries, there's cash discounts. I was recently in Italy. They actually wanted more cash than in terms of transaction. You actually get 5% less when you do that. Every penny matters for a lot of people around the world. So that is also one of the reasons why if you stay within the crypto arena, if you're transacting from crypto to crypto, it's perfectly safe and great if you can do that. But when you need to convert to cash, that's where you run into the first hang up, which is why I think Kraken was so excited to partner with us, and why we're so excited to partner with them is because anyone in any of their cryptocurrencies that they transact online, if they wanted to convert that within the Kraken app and say, I want a cash payout, they can do so. They can go to one of, let's just say, the 5,000 Walmart locations around the world, or specifically in the US right now, where they can then do a cash out of their crypto to cash in terms of that conversion. So all those reasons why I think if you rethink the network and the use cases for it, what we wanted to do is think about ourselves less like a remittance company, much more, this is a global payments platform. So what can we do with this global payments platform beyond what we've traditionally done? And I think that's a big part of this refounding we're going through.
Yeah, yeah. And on the blockchain specific side here, on the stablecoin side, obviously Kraken is now a big partner. When it comes to facilitating the stablecoin transfers for MGUSD and previously USDC, what is the underpinning infrastructure that you guys are using on the blockchain side, on the protocol side, if you're moving funds across different blockchains? Can you just give us a bit of an insight into like what MoneyGram is using to move stablecoins? What blockchain networks, what tools, what kind of digital asset infrastructure are you guys using under the hood?
So I think on the consumer wallet, when we're talking about MGUSD, and by the way, we see ourselves as really building out an open network. So what you see is that we just signed a deal where we're the validator for Tempo. Yep. We're also a validator, I think, for Solana that got announced last week, and you'll probably see us do a lot more in the arena without announcing anything too early. But what I would also say is that when you think about the consumer MGUSD product that we're talking about, that operates on the Stellar network on their ledger. The way we do issuance on that is through Bridge / Stripe. And then our smart contract infrastructure is managed by M0. And we go about, orchestrating between each of these areas. And then, in terms of the security of it, and as well as doing the custodial part, we leverage Fireblocks. Yep. And so all of those, I think, are leading firms that we use for specific purposes. We think, for instance, M0 is just really, in our mind, best in class in terms of doing smart contracts, especially in terms of what we do. I think, what we are doing with Stripe / Bridge, we looked at a bunch of partners, and for us, we were very excited to work with them on that issuance part. And so when we assemble it, what you have is where we are still doing a lot of the, I would say, the coordination, but when you think about the issuance of it, we hand that out to Bridge, and then on the smart contracts, we give it to M0, and it's all run on that Stellar blockchain that we've been partners with for about 5 years. And we're excited about that. That's one use case. I think in the futures, as you think about Treasury, which you alluded to, we'll specifically look for different use cases for them too. And we do, by the way, still transact, especially on the back end, in terms of settling with USDC still as well.
Yeah, yeah. And then on the validator side, obviously, to be a Solana validator, you do need to hold a SOL stake and stake it. Similarly, on Tempo, they're obviously pre-tokens, so it's a bit of a different dynamic. And then Stellar, you didn't mention that it is a proof of work chain, so it's a little bit different. But is this going to be part of like the distribution and go-to-market strategy then for MoneyGram? Like accumulate tokens based on networks that you guys want to be a part of or affiliated with, that you are excited about longer term, become a validator, kind of have a stake in the network, help govern it, help be a part of it in the early days, and kind of signal your, let's say, for lack of a better term, alliance to what's being built here?
I think that what you said is correct. Maybe a different, another angle I would say that we're thinking about it is that we're excited about the world as it moves to digital, and the best thing we want to do is operate in an interoperable way on an open network. And I think for our consumers, what we're going to do is find the best blockchain and the best infrastructure for their use case in mind. What we do know is that however way we used to do it, will over time evolve into something that's smarter, faster, and much more cost efficient. And if that's the case, the way to do that is by moving everything to digital currencies and blockchain. And so we'll find the best use case. We might find that, honestly, based on our trading partners, that there's a blockchain that we're currently not even talking about that works better for treasury in a country like India or something like that as our vendors. But what we have done so far is that on blockchains that we feel excited about, we want to have participate as part of the community to make sure that we help. And I think these validators is a good first step, but there's many other things that we can do in terms of contributing to these networks.
Yeah. You know, part of this larger digital shift of digitization, I just had like a Larry Fink clip play about tokenization and just speaking about how it's so obvious that the ease and efficiency capabilities of, digitizing a lot of parts of finance is just like the world tends to move where there's seamlessness, right? It's just like we humans are designed to go towards more seamless infrastructure. This has happened over time. It'll continue to happen. When it comes to kind of building out that broader idea, what a lot of companies have done, Anthony, is they try to become like the super app. So your wallet is where you have your stable coins, where you send your remittances, but there's also prediction markets on there. There's also perps. You can also buy and sell spot, tokenized equities, commodities, securities, crypto. You can stake, you can earn yield on these. Then they have a card. So you have your card attached to it. And all of a sudden you've got, this entire all-in-one everything app. And it feels like every fintech services company is competing to be the everything app, which to me feels like a little bit of an interesting dynamic where maybe you don't do that. Maybe you just really specialize in one area, or you compete on that big stage against the Robinhoods, the Coinbases, the Revoluts, etc. What do you see as MoneyGram's unique advantage here in this kind of classification? And like, is there a future where we can trade crypto on MoneyGram and we'll have a card and tokenized equities and kind of more in that everything app direction? What do you think about that from a philosophical, business, economic lens?
What I would say is that I think our sweet spot so far as we think about our user base is that we actually have a massive trust and a massive customer base. We have 60 million active customers on the MoneyGram network globally, which are typically customers that have been underbanked because up to this point, delivering services to them have been, I would say, inefficient and difficult. We also work in an environment where we're heavily regulated, so I wouldn't be able to comment if we're going to do anything like in the prediction space or not. But what I will say is that when you think about the promise of owning that whole stack, our goal is let's offer and democratize finance for people around the world who might have potentially been left out of being included in terms of all these financial innovations that has happened up to this point, and give them access in many ways that Amazon has done in the past by opening up commerce and others. The point you brought up earlier about like why do people need all these services? We'll study and look hard and figure that out over time. I do want to say that in the beginning of any, I would say, technology revolution, you always find people say, why do I need that? I remember when Amazon first came out, people were like, why do I need shipping in 2 days? And they were like, you had a lot of retailers that would say, why is 10 days not fine? In the old days, if you remember, there's this great Tom Watson Jr. quote that said, the market for a PC is not more than 5 people we can see that will actually need it in their home. And so I think we're just kind of going through that. But if you take a look at where this stuff's going long term, it's clear as night and day to me that where the world's going, and that's the future we need to build towards, and not get influenced by the day-to-day noise in the space.
Yeah. So just coming back to like the stablecoin and payments part of the business, and you explained how, at least at the top of this, you explained the transition from analog to digital, or similar industries, but different outcomes with regards to the profit margins, whether they've been squeezed or expanded. When it comes to implementing MGUSD and stablecoins into the payments offering, what does this actually enable economically for MoneyGram? How much are you guys thus, like by saving a bunch of cash? Are you guys earning more on the top line revenue wise? Aside from the payments experience and the quality of the experience, economically speaking, what was the incentive to do this? And if you get it right, what does that economically mean for the business side of MoneyGram?
Well, I think the most important thing is, first, it's really early for me to give you any predictions about where we are right now. But what we would say is that the promise of what we plan to do is that we believe it's going to allow us to run more efficiently, especially with our float. It's going to allow us to lower the cost to operate. And it will allow us to settle much quicker. And as a result, it's going to allow us, I think, really quickly to, if we see savings, we're going to be able to pass that on. So we can talk about an industry where, you know, a customer would be charged 1%, 2%, sometimes 3% for a send, and lower that by 50%, if not more, over time. What I do believe is if we get this right, and the way we think about MGUSD is that we are trying to verticalize the whole thing, is that we're going to build a much deeper customer relationship because we're going to build services on top of the MGUSD, which will increase the lifetime value on it, which will, in the long term, drive much higher revenue for us at much higher margins because we're going to have deeper relationships with these consumers. The key thing in any financial service is it's not trying to win one transaction, but really to try to win that customer relationship over a number of years. That's why, you know, you see so many banks in the space today and traditionally have offered customers a certain amount for free checking. Well, it still costs them a lot of money to operate those checking, but if they can keep your balance there, it means a lot. And I think the same thing's going to kind of play out when we talk about stablecoin.
Yeah. Do you see a future where MoneyGram would put Bitcoin on its balance sheet?
I don't want to predict too far ahead, but based upon where we are right now, my answer is probably no. Just because I think there's a lot of regulatory reasons why we would not do that for the time being. But that being said, you know, there is a lot of reasons why we would have MGUSD on our balance sheet, and I could see us taking other types of stable coins on our balance sheet as we convert them in and out, because even if we have MGUSD, we're not naive to think that's the only stablecoin we're going to trade. So what you're going to have to do is think about how you link these cross chains and cross currencies back and forth on stables.
Yeah. Coming to kind of like how you're thinking about where the business goes from here with stable coins, with MGUSD. You know, we're in the middle of the regulatory hurdle right now for blockchain and for this industry. There's going to be another Clarity Act hearing on July 17th. So, you know, a couple weeks away, 3 weeks away. When you think about what you guys need to really fully unlock what you're trying to do from the vision side, regulatorily speaking, Genius obviously has been passed, but it's kind of in the stages of implementation. Not exactly implemented in the way that I think all of us have expected quite yet, but it's a process. And then Clarity obviously being the big one. When it comes from the MoneyGram perspective about moving forward, moving faster, getting deeper into using these payment networks, using blockchains, what do you need to see from Genius, from Clarity? Are there obstacles, holdups that are kind of holding you guys up from moving right now on the regulatory side? What's your kind of high-level view on here's where we're at? You know, if we get Clarity through, Genius Act fully implemented, here's where we can kind of go. How do you think about what's happening up in DC?
Yeah, like any type of regulation, people that work in a regulated industry, when you have any level of clarity, no pun intended, you can operate a lot faster. I think in this case, providing a better understanding of where things sit in terms of rewards, I think where things sit in terms of what we wanted, what the framework is within the guardrails of how we operate within stablecoin is going to be massively important. Then that being said, the one thing that's different about the Clarity Act, and that's only applies to the US, is that we will have a framework. And then we're going to want to use that to be able to interoperable within the countries that we operate within, because we're connecting the world. We work in over 200 countries, 20,000 corridors. So there's a lot of permutations you can probably imagine. By the way, that complexity is a moat for us because it is so complex that you have to operate within. And I would say that as we build that clarity, it's just going to be one more step forward. I would say that, not to lose sight, the Genius Act provided a huge amount of confidence of how we could operate, at least taking that first step.
Yep.
And so it gave us a lot of assurances about, when we talked about our partnership with Bridge, what we needed to ask them for and what they needed to be compliant to and what they're building towards. Gave us clarity in terms of that. And I think it's going to probably dictate the same way. What usually happens is when a bill gets passed, there's a level of reaction that would take a little bit of time for that to play out. And I think that's what we're really seeing with the Genius Act. And I hope the same thing happens with Clarity.
Love it. Anthony, last thing for you from my side, boldest prediction for financial services apps as a result of stablecoins in the next couple of years, agentic finance, stablecoins, blockchains, tokenized assets. What is kind of like the tipping point? What is the 0 to 1? What is a bold prediction about where apps and companies like yours are headed?
Well, maybe one thing I would tell you is that when you think about agentic commerce that we talk about, I think that at some point those people are going to get registered. The agentic agents are going to probably get registered to a real ID before they can actually transact, so we know actually how to handle returns and who's actually transacting. So that's my personal feeling about where things are going when you ask me about 2030. It's going to be an exciting space. No one's talked about that, but the level of, what we have right now is the Wild West of the early days of cookies online. If you remember, like who cared on your browser, and then it became a really sore topic or point. So as you play this out over the next 5-6 years, I think that that's where it's going to go. And it'll be really interesting to see how the space evolves.
Anthony, appreciate your time. Best of luck. Congrats on launching MGUSD. And we love to have more financial services companies coming into the space, taking it seriously, doing things the right way, and utilizing the amazing technology that has been built here. So appreciate your time, Anthony, and have a great week. Hope it goes well for you. And it's a bull market for stablecoins, man. So
yeah. In the long term, like I said, I completely agree with you. We just have to drown out the daily noise. We are bullish as anyone else, but appreciate you having us on. And
let's get some Bitcoin on that balance sheet. All right, come on now, come on. All right, Anthony, see you, buddy. Cheers, man.
All right, bye.
Let's get some Bitcoin on the balance sheet, boys and girls. All right, great episode there. Fun conversation. Again, these large types of companies coming into the space and just absolutely utilizing the underpinning technology of stablecoins, of 24/7 payments, of global remittances, of scaling, of low cost, efficiency, speed, all of it. It's just impressive. And you just love to see it. You just really love to see it. So it's good. It's good. It's really good. Wow, Hype's at 66.5. What just happened on that segment, guys? You guys were just pumping it without me? You guys were pumping it without me.
W's in the shot.
You guys are doing that to me now? You guys are pumping it without me? What's going on? I thought we were tight here. MoneyGram just followed us on X, 245,000 followers with the quote tweet on Anthony. Let's go, man. Gotta love to see it. Japan up 1-0 on Brazil. Oh my gosh. Gosh. I want to smash Brazil to come back. I just can't. I can't. My friends are blowing me up about it. Don't sleep on Japan. Wow, first round of the World Cup knockouts. Canada wins the first one, huh? Canada. All right, guys. Up next, we have Rob from Infinifi. I think he's almost ready. And then we're going to get into the markets, into the charts, into what's going on out there. You guys are pumping it when I'm not paying attention. Appreciate that. Thank you so much. Thank you so much. Really thoroughly appreciate that. Wow, Zcash up 8% as well. Back to 400. Near up 4.5. Hype up 8% today. Wow, Hype really held that trend and is holding on strong. Bitcoin holding above 60. I think that's what we really wanted to see, guys. I think there's a lot of bears who are saying that we're not going to get anything but 54 or 52K. Obviously, we're not even close to out of the woods yet long term, but our summer bounce thesis is looking pretty decent, guys. It's looking pretty decent. So, what's going on in the chat? I was wrong. Walmart should create their own stablecoin, create a new payment, bullies. Will MoneyGram eventually allow customers to swap tokens outside their stablecoins? I think I kind of asked that. It sounded like yes. Sounded like yes, they were going to be doing the Everything app play as well. Frax going to rip faces off when it pumps. Only 100 million tokens. Shout out Frax, sponsor of the show. Great team, long time standing. They're doing a lot of big deals behind the scenes for getting their stablecoin integrated into some pretty large companies out west in the States, actually. I'll put it that way. So pretty exciting. Man, what is Ansem's coin at? Gecko. I like Gecko Terminal, by the way. I've just started to use it. Guys, if you remember that Nest token that we were looking at last week, Loki, I think it might be a play right now. We'll see. What is it called? Black Bull? Checking in real quick, and then we'll get Rob up. Dude, it's still up. It's not going down. I think this is it. Yeah, this is definitely it. Yeah, it's still up. Crazy. All right, guys, we've got Rob Montgomery, the founder of Infinifi. He is going to walk us through the updates from his side, seeing what's happening in the stablecoin market, in the DeFi market. We're obviously seeing the growth of tokenized assets, and I think that's kind of like the main kind of viewpoint for us in the market at large for a lot of these DeFi companies. How do you capture that value? How do you stay on top of that value, et cetera? So why don't we get Rob up here in just a couple seconds, guys? And then we'll get into the market and the charts after Rob. Hype 66.2, huge hourly close. I know you guys aren't like as much of TA fans as I am, but we've gotten now 1 hourly close above the 200 SMA, which is like the longest standing SMA. It takes a while. 2 hour close above the 200 SMA. And we got a 4 hour close, and we're about to get a 4 hour close over the 100 SMA, putting us back above all the moving averages, which will bode well for short-term price appreciation. Obviously reliant on Bitcoin, but we needed that, and we needed to see that, and that's what we got. So we're looking pretty good here, guys. Let's get into our next guest, Rob. We're going to bring him up, and we're going to talk DeFi, scaling, Infinifi, updates there, and really the growth of tokenization as the main driver for a lot of these DeFi companies and driving their revenue, driving their TVL, their users, etc. Let's bring him up. Rob, what's going on, man? Welcome back to the show.
Good to see you, man, buddy.
I'm doing well. How are you, man?
Been doing quite well. It's a wild market out there, but we are continuing to push pretty good rates for our users. So
bullish.
Yeah.
It is wild market. Everyone's screaming at Saylor, worried about the AI boom coming down, worried about everything. So what is happening though, Rob, is there's this massive growth in the acceleration of tokenizing assets. 2 weeks ago, we saw SpaceX launch on Solana, on Hyperliquid Spot and Perps, coming to Ethereum through products like Uniswap and Aerodrome. People are wanting to trade and invest in tokenized assets on chain. Obviously, stablecoins have grown significantly. Tokenized deposits have grown significantly. But we've just been continuously developing this bull thesis around DeFi protocols that there is this massive multi-$100 trillion market that is going to take a while, but over the next decade or so, there are hundreds of trillions of dollars of tokenized real-world assets coming on chain, and there's a select amount of DeFi companies and protocols that are going to capture this value. So in the context of today, I just wanted to kind of get a temperature check on Infinifi and really just get an understanding of how you're thinking about this tokenization wave from a DeFi founder's perspective, from a protocol perspective, and capturing that value. So that's the context, Rob. That's what our audience is thinking about. That's what we're curious about. It's good to have you back.
Good to be back. Yeah. So at least from Infinifi's perspective, we see this as the way that we, as a system that's designed to basically do what a bank does, borrow short, lend long asset management, where you deposit your capital to Infinifi, we're going to deploy it out to a variety of different venues where it's going to earn, a rate that you could only get in a duration asset, like a tokenized fund, for example. And we view this as the way that that sort of business can scale, because you have all these different assets on-chain and off-chain. On-chain, the problem is a lot of them don't scale very well. It's really hard to put a lot of money into, something like the basis trade. Even something as big as that does cap out at, 10, 20, 30, 40 billion, which sounds like a lot, but it's not that much money. And that's limiting our ability to generate yield just to crypto and crypto-backed assets, which is not that big of a sector yet. Where the real scalability lies is in the traditional world, in things that are based, real income streams, lending, so private credit, things like asset-backed finance, receivables on trade goods, receivables on invoices, receivables on credit cards. There are a ton of financial products out there that are based in, provable real-world income streams. And we at Infinifi, our job is to ladder out portfolios. We're quite good at it. And we see the major growth vector being deploying capital out into those sorts of assets. So we've been prospecting. We found M Global earlier this year, anchored it with a $30 million deployment, helped bring it on chain, and we're continuing that process.
And what is M Global, Rob?
That is it's a collaboration between Midas, Fasanara, and I suppose ourselves. It's Fasanara's GDADF fund, tokenized through Midas. It's a bunch of trade receivables.
Okay.
All domestic of the countries they're originating in. It's yielding around, I think, 7.5-ish right now. Cool. The NAV's just gotten updated, so I don't know what the new rate is. But that is a very, very quality set of assets. 3 billion AUM for the past 8 years. Never had a single drawdown month over month. Very good asset.
Yeah. And trade receivables, that is, you are earning a yield on the time it takes to receive a good and get your payment for that good. So you're basically, is it like,
yeah,
it's like
so
invoice
somebody orders a
forwarding
part,
kind of?
they'll get their payment when the part gets delivered, for example.
Right.
And okay, well, they need the money now since they got a separate
Right.
thing. So okay, you go ahead, you pay them, you collect the money when the thing arrives, and you're financing like auto parts for who's that French car manufacturer? I never remember. The Fasanara guys will tell you all this stuff.
Yeah.
But
Okay.
yeah, you're financing, these transactions that are with very large corporations who pay their bills.
Yeah.
And so you're basically just ponying up the money so they can cover the gap. It's a very sustainable form of business. And RWAs are full of stuff like that. All of these funds who've been doing this for years now, well, they've found these assets. They've set up known streams of revenue. They've got proved out businesses, and they're just looking for more money to grow those businesses.
Yeah.
And that to me is where on-chain markets are really, really good at contributing capital from places that normally wouldn't directly be able to deploy that capital.
Yeah.
At least from our perspective, and this is a new thing that we're starting to push into. And I can talk about secondaries a little bit here, because we are also playing with that. But the thing that we see as the more immediate opportunity, and our view has changed a little bit recently, we've seen a lot of interest in, I would say, siloed products as we've been pushing into the neobank world, which is where we see a lot of demand for these sorts of products coming from over the next 5 years. Retail who doesn't realize they're facing crypto. And as we've gotten in there, we've realized, okay, what do these guys want? They want assets. They want siloed counterparty exposure. They don't want exposure to 5 different funds. They want exposure to maybe 5 different funds with one asset manager, but 5 different asset managers. And that to us presents a very interesting opportunity where you can see crypto becoming the bridge between these individual asset managers who normally couldn't face neofinance, since their assets are illiquid, and bridging that demand via things like Infinifi.
Okay, so could you give us an example of like what this looks like? Because I know, for example, I actually heard on the Tokenize This conference last week how it's actually hard to bucket different asset classes together in traditional products. Like it's hard to have an ETF that is, has some commodities in it, some individual name stocks, and some crypto ETFs. Like you can't really bucket different asset classes together that great. And so some of these tokenization partners are, they're building products that give you an ETF like exposure, passive vehicle, but it owns some index funds, it owns some Bitcoin, it owns some gold, and it owns some single name stocks. And so this is kind of like an introduction for me of like, doing these things on chain gives you new investment primitives. But you're talking about more like on the kind of back end for the actual managers and not being able to interact with each other. Perhaps you could just illuminate a little bit there.
So if you're a neobank, right, you might want exposure to an asset manager. Like you might want exposure to, say, 5 of BlackRock's funds. Let's just use that as an example. Okay. Normally, you couldn't touch those because they're illiquid, right? Your users want fast liquidity. They want to be able to move in and out rapidly. And so you don't want a lot of the portfolio yourself. The asset manager themselves might not have, the wherewithal to set up a brand new regulated product off the shelves just for you, but they might be willing to tell you, hey, this is how you should ladder it.
Yeah.
And so you could take something like Infinifi and have that asset manager say, hey, of our 200 funds, these are the ones you'd want for this. This is the amount of capital that each one should have. And we'll go ahead and we'll set this up for you. And we'll operate it using these rails. And now it's basically, you're just connecting two financial participants using crypto rails and the advantages that this industry brings and the higher liquidity, faster ability to move in and out of these positions that neo-finance demands. And you're just connecting between these two. It's kind of an ETF-like product, but without having to set up a full market even. You're just, you're controlling the ladder of the portfolio. And that's what Infinifi excels at.
And so the ladder being the duration of holding certain assets in the portfolio?
So there might be a fund in there that has quarterly. There might be a fund in there that has weekly. There might be a fund in there that has monthly. And you're just setting up a different makeup of those assets such that you're producing something that has a very good liquidity schedule. So when people need capital, there's always capital.
Right.
And then you can even tranche it out, which is another thing that we do.
Yeah.
And bring in people from the DeFi side who, honestly, DeFi people like risk.
Yeah, of course.
Why? Not going to, tout anything up, but you basically are able to source that side of capital from the DeFi component, and then on the more retail side, you can sell it out the door to the neobanks.
So in the lens of this conversation, Rob, we've been thinking a lot about like this tokenization growth, right? Like it's going to keep happening. There's a lot of these tokenized assets that are going to come on chain. They're going to continue to come on chain, and we're just going to see this growth of stable coins, tokenized deposits, tokenized equities. Then you get all the way to like real estate, private credit, other forms of short-term, long-term bonds, yield-bearing products, et cetera. And we continue to ask ourselves and our guests and our audience if we're right here, right? Like if we are right in the next 5-10 years, let's say $20 trillion comes on chain of like what we think there's about 200 to 500 trillion possibility in the next decade. We say like, let's say there's 10 to 20 trillion that actually does come on chain in the next 5 years. Who wins? Like who is the biggest benefactor of this movement? Whether it be, or maybe we start with like who loses. And I think there's like different answers to both questions. And we're trying on the show to form our mental model around positioning for this as an investor, as an entrepreneur, et cetera. And so just thinking about if this tokenization thesis is correct, Rob, let's call it 10, 20 trillion moves on chain next 5 years. Who wins?
Who wins or who loses? Which one do you want me to do first?
I think one will answer the other.
So wins, people like me. People like Midas, people like Centrifuge. So really the people who are willing to sit here and aggregate these things is one. and then can sell it out, further up the distribution chain. I would say the people who are doing the tokenization is two. I think they have a very important role to play. I think there will be new entrants in both markets. I'm not going to say, hey, all the players here are the winners, but I think that the structural components of this are quite clear to me where you need what. Because a tokenizer doesn't want to, control a brand new novel portfolio. An aggregator doesn't want to do tokenization. And a neobank doesn't want to do aggregation and tokenization. People want ready-made off-the-shelf products. They don't want to have too much input themselves. That's something I would say that we have learned. I would say I do think that there's something to be said for the looping thesis, and so the lending markets definitely have a role to play there. I'm not so sure about people who solely focus on, DeFi native stuff. Like, I like DeFi native, don't get me wrong. I just think it's not going to be as scalable. So if your business is contingent on just constantly sourcing yield from the basis trade, which very few are these days, fortunately, or if your business is contingent on just lending against crypto, I think you're going to be in trouble in the next 2 to 5 years. Maybe not immediately. A lot of those, especially the big players, they've got plenty of time. But if you're trying to build the truest, like, hey, let's just long Bitcoin. Let's just long Bitcoin. Yeah. That's all of our focus is long Bitcoin or short Bitcoin. That's not sustainable. I'd say you got to be able to branch out, because we're not going to get the pure original DeFi. We're going to get something in the middle where TradFi is now part of it. And we are now part of TradFi. JP Morgan, while we were on this call, actually just as we started, they just announced that digital assets are moving into the core of the U.S. financial system. That's Jamie Dimon saying that. Yeah. It's happening. It's unquestionable that it's happening, but you got to be willing to adapt.
So then some of the losers then, are we just thinking about like the incumbents who are used to maximizing shareholder value and profits based off of like the older kind of system? Think about when brokerages charged commissions. Obviously that changed, but now your order on brokerages is kind of the same way that, like, if there's no price to pay for social media, your data is the price that you're paying, or whatever it is. With brokerages, right, there's no commissions, you pay now, but your order flow is market makers are effectively monetizing that. When it comes to the traditional system with this tokenization kind of growth, who do you expect to kind of fight the hardest, or kind of who are the bigger losers there?
Oh, you talking about the existing tokenizers?
Yeah, I mean, the whole thing with tokenizing equities, right, is that like we can trade them 24/7 on chain with a different set of market makers, a different set of users, and we don't need to go through the whole middleman rails of everything that it is existing in TradFi plumbing. That's just one example, but I guess the broader question is if the winners that you just explained win, this pie is growing, but there's also a total sum of a pie. Who's having their lunch taken more than the others?
In the TradFi world or the DeFi world?
Yeah, I think in the TradFi world.
Okay.
But I think in the DeFi world would be interesting too, Matt.
The TradFi world, I'm not going to say the interactive brokers, because a lot of them are, adapting.
Yeah.
But I'm sure there's going to be some of them.
Yeah.
People who are, fully dependent on and you have to remember, I know TradFi decently well in places like private credit, but I can't tell you I'm, a super experienced equities trader.
Yeah.
In terms of who I would be willing to bet is the biggest loser there, it's probably still going to end up being the brokerages.
Yeah.
just because you now have the ability to bring this stuff on chain, anyone who's doing margin lending, especially over time, is going to be a big loser, because you can get just much more efficient margin lending on chain.
Yeah.
People don't think about that very well, but you can. Oh, okay. This one, I got a hot take. CME.
Yeah.
CME.
See, now we're talking. Why?
Yeah, there's your hot take. Because the futures trading system as it is Byzantine and inaccessible to typical traders.
Yeah.
Perps, in my opinion, are in most ways a much better product. And ultimately, I think they're going to have to adapt or die. I'm not saying, you shouldn't be trading futures at all, but if you're trying to express a long or a short view, unless there's a reason to have it time dated, there are some people who it makes sense to have time dated. There are some people, especially if you're using it to hedge, for crops. Okay, that makes sense. But if you're just trying to express a long or short position in the market, perps are a measurably better vehicle to express a long or a short position. So I think that's the reason that they are suing the CFTC right now for allowing perpetuals. They know that their business is being threatened.
That's what I mean. That's kind of like where we're at in this tokenization saga.
Exactly.
We're in the it's clearly happening. We're gonna fight it, but we're also building internally to develop for it.
Have you ever tried to trade futures on the CME?
No, I've never traded a futures contract in my life.
The standard decimal system for pricing, right?
Yeah.
They use some weird base 8, might be base 64 system to indicate fractions of a cent. It is the strangest way I have ever seen people price something, and you can just smell that it was invented in the 1800s. It is so beyond outdated the way that they are doing things over there. And so, it makes total sense to me that, perps are going to show up and eat their lunch.
Yeah. Rob, kind of thinking about this latest Aave Horizon launch that you guys just pushed forward, kind of pushing forward tokenized private credit for institutions. Kind of give us a bit of a sense of where Infinifi is headed from here as we kind of close up here. What does this launch kind of mean for Infinifi? Where you guys headed now as far as the product, and specifically with adopting more and more kind of this tokenization RWA growth? How do you capture a lot of that?
Yeah, absolutely. So there's really two ways that we're involved there. The first, and this is a longer term development for us, we're working on setting ourselves up as a dealer. Not a dealer-like entity on these RWAs. Since we have the ability to hold them on our books, we can offer people exits, so we can provide liquidation services. And that's actually something we're doing for M Global. We are the designated liquidator for that. We have the first right of refusal on that asset. And so we're able to get very good pricing on it since we, staked it. We were the first ones to put up capital. In terms of where we're taking that, as we see more and more of these, we have a dedicated service that we're in the process of building. And that'll be allowing us to offer this on a much broader spectrum. When that happens, well, we're watching the market, gauging how quickly the uptake on this is, what the demand is we have for our pilot program, and going from there. Now, the second angle is a bit more bespoke offerings, but currently in the early stages of building something on that. We've seen a lot of demand for those sorts of products, where basically, we're having somebody else curate using our system and structuring products such that they are, a good bit more accessible to a lot of the world. I will not get too in the weeds on that, but that's been showing a lot of promise, and we're very excited about that forthcoming product.
Yeah, I mean, access is a big part of this as well, right? Like we talk about,
regulatory compliance is something that we've run into, and we believe we found a way to work with it rather than against.
Yeah, and clarity's coming, man, real soon as well. So
clarity's going to be here before we know it. And
it should be. We'll see what this hearing in July has. Somebody in the chat says, I keep hearing Seth Rogen.
Oh, no, not again. I mean, hey, I guess I need to lose some weight. When I'm not, weighing probably about 250, I usually get Chris Pratt, but I'll take it.
Well, Rob, we've got a ton, your favorite clipper here in the Empire State Building, managing the show. Thank you for being with us, Rob. Looking forward to more of the rollouts from you guys on this tokenization front. I feel like there's obviously a lot going on there amidst this kind of market noise. So heads down, staying building, and thanks for your time, man.
Much appreciated. Great to be here, Andy. Take
All right,
care.
Rob. We'll see you soon, buddy. See you in New York.
See you then.
All right, buddy. All righty, guys. I got in Pendle early. Shine is back in the chat. Shine is back in the chat. All right, guys, let's pull up the markets. See where we stand amidst this madness that is the Saylor strategy happenings, amidst this madness that is perps growth. As Rob was saying, I mean, the CME is fighting Hyperliquid right now via suing the CFTC. It's interesting. All right, let's look at the talk of the town from the weekend was this HIP4 prediction market growth. So I have that open, and I have also this priority fees thing from Hyperliquid. So I'm going to show you guys this as well. So let's go ahead and pull it up. So guys, this was something that like either I missed it or it hadn't really been talked about, but basically there's priority fees on Hyperliquid for faster execution and market data. And you can order queue jump plus the read priority auction daily since launch. And for some reason, we've just gotten a massive uptick in priority fees over the last like 5 days. And then if you go to the actual revenue side, it's like, it's not like we've gone up a ton, you know? Like it's, so I don't really know what's triggering this, but we're running at a $25 million a year or so, $23.9 million a year run rate in priority fees. There's only been 265 all-time payers. You gotta imagine that these are whales paying for better pricing. 147 people trading on it. So that the amount of traders using priority fees is also significantly, you know, it's a very small amount, but also growing quite a bit. It's just interesting. Top market is SpaceX and equities. See, this is it, guys. Like, as long as HIP3 keeps happening in the way that it's been happening, which is open interest, it's at $3 billion, a lot of that trading activity keeps happening. Like, I think the thesis is intact as long as we just keep seeing HIP3 grow and happen. And so, yeah, here's the priority fees, primarily SpaceX markets, Micron. And then, you know, this one guy has paid 21% of it on SpaceX. Another person on oil, SpaceX and oil being the top two. Yeah. I mean, it's interesting. These guys are paying a lot to get their orders executed properly. So that was one thing that I saw this weekend that I thought wasn't even priced in because I didn't really even price it into my thesis. So I was like, okay, that's interesting. The other thing is HIP4. We saw the largest volume day on June 27th. And we're just seeing, you know, the trend is slowly trending up. Sports, obviously a big category with the World Cup happening. And I think what was interesting was there was this is interesting. So Hyperliquid is 14% of the way on its way to be at par with Hyperliquid, or sorry, with Polymarket 24-hour Bitcoin prediction market volume. I honestly think this is going to take over fast. Like I think Hyperliquid will get to 50% of just Bitcoin markets on Polymarket, like this year, like this quarter 3, next quarter. This obviously I think is going to take a lot longer. I mean, like obviously the total platform volume is significantly higher, but if we're looking at just prediction markets, I think obviously we have a long way to go. And obviously the perps are leveraged so that they, prediction markets are not leveraged. Perps are, so you get like a lot more volume on them. I mean, look at this trend. Like insane. Insane growth for prediction markets, man. Kalshi, $10 billion this past week. Polymarket 3.4, HIP4 80 million. That's what I mean. I think HIP4 is going to be the number 3 prediction market as of like, I don't know, next couple weeks, next couple months. I mean, this is the big end game, right, guys? Like, let me just make sure this is up here. I don't know if this is going to be able to actually happen. I mean, if this happens, like the thesis for Hyperliquid goes from like CME, NASDAQ, Binance, NYSE to like all of those plus all of the prediction markets. I mean, we haven't even scratched the surface on breaking down the volume from prediction markets. Like, even if this gets to like 25% of Kalshi, I mean, that would be unreal. That would be unreal. Unreal. Completely astronomically unreal. And so I don't think HIP4 or the priority fees are really that priced into this market right now. That oil trader is definitely IRGC. Wow. Imagine. Yeah, I mean, guys, this is the whole nother story that we're gonna have to start covering on the show. I mean, obviously, I didn't really factor this in. How about this? I've been doing quite a bit of trades on Kalshi. Let's say like, not like $2,000, like $400 to $500. You pay $21 or $9 on a $600 trade on Hyperliquid. You pay 42 cents. Wow. Wow. I mean, guys.
Wow.
I mean, like, it's not even close.
Embarrassing.
Like, is it? Are we missing something here? I mean, it's obviously not as good, like, of an experience, and they don't have as much marketing. Like, obviously, going on your phone and just like popping up Kalshi or Polymarket and like placing a sports bet or whatever it is, or prediction, should we say? Yeah, I mean, that's obviously easier and better marketing. Wow, Brazil scores. Oh my gosh, I was about to take that. I was about to take Brazil. Wow. This is nuts. Wow, what a game. I honestly just want to play on the stream, but I feel like I don't know if that's the vibe. I don't know if that's the vibe, guys. I kind of think it is the vibe, though. I don't know if you guys are gonna stick around for that, though. But I kind of want to watch. Wow. I really want to watch. All right, well, we're gonna wait till till it gets a little later in the game. But yeah, guys, I mean, I just checking in there on our lovely prediction markets. This is also like very low. This is the lowest it's been in a while. Again, we keep saying this. I think there's probably opportunity there. I think they're probably hitting the ATM and buying hype today. That might be why it's going so strong, but maybe not. But I also think this is like super low, guys. And I think there's probably opportunity there. Obviously, hold hype as well. And then what I was telling you guys about on the other side of things is this looks really strong. That weekly, obviously it's like not a lot of history, but had like that one of the highest weekly closes, broke all the levels that we needed to. And I think once it gets above $2, like there's obviously like this like level here at $2 that needs to, get past. But I think once it breaks 2, I mean, you're going to start to hear comparisons about how it's hyper liquid but better technology. Why is it trading at $600 million market cap and $2 billion FTV? You'll start to see and hear comparisons about it. Any opinion on lighter, similar pages to check on stats? I don't know as much on lighter. They'll regulate that spread real quick out of the US. Yeah, for the prediction markets. Yeah, that could be a problem. I agree. Put your first bet on Hyperliquid on Japan live. No, dude, I was going to bet Brazil live before Rob came on. I knew I should have. I knew Brazil was not going to go down to Japan 1-0. That was just not going to happen. Brazil going to take this. I agree. I got some futures bets in the World Cup. I don't know if there's a lighter data dashboard. Can anybody help? Can anybody help to find that? If you guys can help find a lighter data dashboard that's really quality. Place to stop, guys. Really, really fun show today. Great World Cup match. We got the bounce that we needed. We needed a daily close to really solidify it, to get the Bulls back in control a little bit. Bulls, I think, on a good daily close here on hype and lighter are fully in control. Obviously, fully dependent on Bitcoin. But yeah, I mean, great show, guys. Fun show. And yeah, I'm getting yelled at by the producer about getting in trouble here for sharing the World Cup. So, yeah, yikes. All right, guys, much love. See you guys soon. And you know where we'll be tomorrow, 12:30 p.m. Eastern. Can you restart the live stream, or are we wrapping up early? FIFA over YouTube overlords say no. I'm cooked. Only on X. We'll talk about it tomorrow. Yeah, guys, it was a fun show. You know where to find us. In the bull, in the bear, wherever we may be, we will be bullish. We will stick to it. And we will continue to position. Oh, it says we're back on. It says we're back on. Are we back on? Are we back on? Let's see. We're back. We're so back. We are so back. We cannot show the World Cup anymore. As much as fun as that was, YouTube just took us down. Wow. All right. Yeah, I mean, I guess people are paying a lot of money for the game and for cable and for all that, so I don't blame them, but it was fun while it lasted, guys. Wow, Brazil scores. Last. Wow. Brazil scores. Oh my goodness. We just missed it because of freaking YouTube. No, wait, it got taken back. No. Gabriel Martinelli. I think, the people are watching it here. Brazil scores. Yes. Freedom guy hits. Wow. Brazil's going to be a madhouse. Oh my gosh. Viva Brazil. Viva Brazil. Guys, what a wow. Freedom guy called it. Guys, thanks for rocking with us. I'm going to end the show today. It's been fun. We'll see you tomorrow at 12:30 p.m. Eastern. We're not going to be streaming the World Cup. Apparently that got us in trouble this time. We're going to play by the rules. So thanks for being part of the show. You know where to find us. You know our positions. You know our stance. We're going to hold the line, and we're going to keep things rolling. We're like Sisyphus. We're pushing the rock up the hill one day at a time. Sometimes it rolls back. We just keep pushing. So, Viva Brazil. Beleza, irmãos. Eu amo Brazil. Let's go, team. Thank you, Rollup Army, for being here. Noxum, Freedom Guy, Edward, Stephanie, and everyone else. Steven. We're still looking for that link, Edward, by the way, for Lighter and Hype Liquid. So we'll get that tomorrow. Guys, thanks for being a part of the show. Inshallah. Peace out. See you tomorrow.